time you get your paycheck, you can see how much of your money goes to pay income taxes. Have you ever wondered how much of the wealth you have built up for retirement will be lost to the expense of income taxes? Does your retirement planning include being in a lower tax bracket? Back with us today are Gary Mattson and Laurel Stewart, the father-daughter duo, part of the team at Mattson Financial, full-service financial and retirement firm in the Grand Rapids area. They're also popular radio show hosts, and we need to welcome them to our show this morning. Good morning.
Good morning.
Good morning.
All right, let's start right off. Okay, a lower tax bracket, is that really possible?
It is, and that's something where it's going to be really crucial to sit down with your advisor. You know, when it comes to retirement, it's more than just the investing. You know, and along with an investing strategy, you equally need to have a tax strategy in place. And, you know, some of those things might be you have a 401k that you've put money into, you know, have a really large asset right there. And maybe it would be good for you to look at some other, you know, after-tax options, whether that's non-qualified options or it's Roth IRAs. But you really need to crunch the numbers and have your advisor work on that with you to see what's, you know, the most advantageous.
Yeah, we had a pair of MSU
CPAs.
college professors came to us and they said, Gary, we fixed this. We've got pensions, we got Social Security. We don't need our retirement dollars. So we took the money out 6 years ago. We paid the tax on it, it's sitting in CDs. And they said, we've done with it. And we're just give it to our grandkids. We need it for college education, other family members. And it sounded like a very simplistic plan. But when we plugged in the tax piece they were doing with their pensions and Social Security, they actually threw those dollars that they're getting from those CDs, threw them over certain thresholds. So they actually paid an extra $5,000, $6,000 in taxes per year over a 6-7 year period. So they actually gave up $40,000, $50,000 in taxes that they really should not have ever paid because of improper planning with those assets, position those assets. We actually rebalanced that portfolio, put them in a position so they're getting tax deferral and lowered those taxes for them. So that's just one way that you look at and say, well, I made a decision, was it the right one?
So you're saying that it's actually possible to receive retirement income from our nest egg without actually paying income taxes?
Absolutely. And that's the one of the things we want to do is that, again, we have taxable money, we have non-tax money, and then tax-deferred money. It's understanding those three buckets, what assets should go in those buckets, how should they grow, and how is that going to affect your portfolio. Ed Slott said it the best. He's the IRA guru out there that talks about this. Many books out there. He spent millions of dollars. People have supported him and saved in taxes. And what he said that most advisors are not trained in how to do distributions for their clients. They're used to taking money in, and even if they do well, if they don't look at that tax component, all they've really set up is an annuity or a payment plan for the government from your sources. And that's the worst you could actually possibly be in, is sitting in a situation that you're paying 25, 30, 35% in taxes that you otherwise don't even owe.
So why haven't we heard about this, and why aren't more people taking advantage of it?
I think it's because a lot of times everybody is so focused on the returns. You know, I really want to have 30% and these types of things, but they don't focus on what that means for them long term. Obviously, returns are great. We all want the ups of the market. You also want to protect from the downs and the negatives there. But when you do have those returns, what's the strategy? Are you going to, you know, reap and harvest those benefits, put them to a position to, you know, on the sidelines? Also, if you're going to take money out of those accounts, then what are you paying in taxes? So as you can see, it's a good thing for the returns, but without having an eye on your tax strategy there, you know, what are you actually paying? And you want to make sure you're not giving too much away.
And is it the thought that the people are thinking that maybe the taxes would be the same whether we paid them now or we paid them later?
It could be, and I think there is some misconception there. Yeah. You know, a lot of people will say, oh, I'm going to pay less when I'm in retirement, which may be true, but it's so individualized based on what do you want to do in retirement. You know, if your lifestyle is to, we know of a woman who cruises 300 days out of the year, taking a break last year, obviously, but that type of lifestyle versus one where, you know, we have another client who, after he retired, wrote a book. You know, that's what his passion was. And so very different kinds of incomes that you need in order to accomplish that as well.
Are there other benefits to this tax optimization planning?
Well, it's so much that it's just very hard to put into words because it's not just about your income, but when you're done with your assets, passing it on to whom you want, when you want, with as little tax implications if possible. So we don't look at it just from your point of view, because understand there's things we can control and there's things we can't control. We can't control the market, but we can control how we react to it. When it's down, buy; when it's up, harvest. Secondly is that, how does that affect your tax structure? What happens with Social Security? Are you going to be in a taxable position because you've paid into the system? Now you're taking money out for Social Security. You've been fortunate, so you cross over thresholds. Now your taxes is on Social Security is 85% of your benefits being taxed. Those are all little equations that we look at in making sure you're in the lowest tax bracket possible for yours, but also when you're ready to pass those assets on to others, they are in the lowest tax bracket or actually no taxes at all in the future. And that's the beauty of tax strategy, is you can control it.
And we can keep more of our money and give less of it to the government this way?
Absolutely, and that just comes back to Leanne having that plan in place. And obviously we're in tax time, that's why we're talking about it. But ask questions now. You know, this is time to look at your strategy, the best year to do it. There's some changes probably coming up due to our national debt and how much we have added to that. And so knowing in the future that taxes will rise, try to take advantage of it this year, 2021. See if it's advantageous for you to look at some other, types of accounts outside of your outside of your IRAs or 401ks. Maybe a Roth IRA is right for you. Maybe it's not, but ask questions. Don't be afraid.
And you have something to help our audience.
For the first 5 callers, if you saved $250,000 or more for retirement, we're offering you the opportunity to come into the office complimentary, sit down with one of our advisors, and let's just get to know each other, start talking about your dreams, goals, and desires, and from there, let us crunch the numbers and come up with that retirement plan to help you get to and through retirement.
Kind of a stress-free situation for you.
Oh, amen to that. Hey, so for you at home, if you want to learn more about how to tax optimize your retirement, Mattson Financial, they have a great offer right now for the first 5 callers, again, that have saved $250,000 or more that are retired or nearing retirement. They're offering a complimentary, full-blown retirement plan just for you. This will allow them to sit down with you personally and provide you with a roadmap, analyzing where you are right now, and then discuss your best steps to really get ready for a successful retirement, a game plan to get you where you need to be. The number to call on your screen, 616-514-3831. That's 616-514-3831.